I know you're pretty bullish on the S&P. You set a price target of 46.25, about a 3% upside from the level we're seeing right now. We're going to get to that in a moment. But first, I really want to talk to you about bond yields. They've ticked up almost 10 basis points since Friday's close, right now at about 1.35, almost 1.36, a pretty rapid rise. How do you see that impacting the market? And of course, we have the Jackson Hole Summit coming up in just a few days. How do you see the market reacting between now and then?
Yeah, I think this is a really interesting setup coming into Jackson Hole, because if you look at the charts technically, the 10-year bond yield at 1.36%, any sort of move above that would look like a short-term bottom has been made. And in fact, the chart looks like a double bottom has been made on 10-year bond yields. And that move above 136, I think, would open the door for another leg higher. And that leg higher could push us up toward what we think could be a year-end objective, closer to 150 to 175 on the 10-year bond yield. So from our perspective, this is probably going to be very good for the reflation trade type names that you were mentioning here at the beginning of the show, Frank.
So, Craig, you've been bullish on the S&P all year long. A lot of people have become a bit more bullish lately. The 51st record close just yesterday compared to 35 record closes back in 2019. So the S&P is on fire. You initially had a price target of 44.25 for the S&P. About halfway through the year, you raised it to 46.25. Are you planning any more revisions based on what we hear and see from Jackson Hole?
You know, I would take and let these numbers get hit. I was told a long time ago when I started in this business, let your price objectives get hit and then reevaluate at that point in time. But if you do step back and you look at the evidence of what you're seeing in the markets today, you do see that earnings estimates are nicely moving higher. You're looking at numbers that have gone up substantially for 2021, and you're looking at numbers that could be as high as 250 for next year. Put all that together with the fact that we've got still a very accommodative Fed at this point in time, and I think that there still could be some upside from here. But right now, we're looking at 3% upside, and I'm going to be really interested as we go through the Jackson Hole and also the September FOMC meeting to see how this sort of transition takes place. Because the Fed has moved from what had been more of a proactive type model to more of a reactionary type approach to dealing with tapering and rates. And I suspect there is opening the door there a little bit for some policy mistakes. And it'll be very interesting as we see the language coming out of Jackson Hole. If we get more of a tapering discussion, I suspect rates are going to move up even faster than what they've been. And I suspect that could lean on the S&P 500 stocks. But Frank, that very well could be a positive for the Russell 2000 stocks that have just been going sideways for months.
You know, Craig, just to be clear, what would a policy mistake be in your mind? Is it acting too soon or too late, or is it tapering at all?
It could be either. I mean, moving too soon in the economy. You look at some of the numbers that have come out lately on the economy. It looks like things have slowed and eased a little bit despite all the stimulus that has been put in. Or it could be that they act too late. I mean, this is a very difficult transition for the Fed to navigate and get this right, keep markets happy, keep the economy growing. I certainly don't envy, Powell, these decisions that they've got to make there with the Fed. It's a very tightrope to deal with. And again, too early, too late has big consequences for the economy and certainly for equity markets.
You know, Craig, I want to squeeze in one more question. Oh, sorry about that. I want to squeeze in one more question. I know you're very also bullish on the Russell. The small cap index is more than double the market over the past week. A lot of financials in there, a bit sneaky. Just really quick, do you see the Russell rising because of reopening confidence, or is it being boosted by those financials with the 10-year yield rising as well?
You know, Frank, I think it's going to be the latter. I think as we see the 10-year bond yield move up, net interest margins improve, and I think you're going to see the banks move up for that reason. And stocks in here like Bank of America look like we broke out, we've come back, check support starting to move higher again. So it's the latter, Frank. It's going to be about 10-year bond yields moving up, and that is a big component inside of the Russell 2000 index.